Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So we're going to get through the morning analysis. Let me just go ahead and grab the bias chart. And like I said earlier, if you missed it, I've got to redo all my charts again. Like I said, I had some router issues. I got a really nice router, but man, um, it just just killed my charts. Hold on real quick. Let me grab something. All right, we're going to start off with the euro dollar as we normally do. Okay, where am I at? All right, so here's the euro. So the euro, obviously, we are at really key support. You guys know all this. It's like nothing's really changed here. If you look at the chart, we paused again off of really critical support here at 99.50. We have the 618, which is at 109.50, excuse me, and then the 618, which is 109.40. It looks to me that the 109.50 is going to be the significant support for today, and you can see how we came within 1 pip of that support and bounce. So what we're going to have to do is we're going to have to write down, support 1.0950. That's important. But let's assume that we rally. Let's assume that the ECB can't really do anything at this point. We get a squeeze. Where are we going? All right, and that's the question, right? So we get this little squeeze. Where are we going here in the euro? Well, my assumption is we're going back to 110.50. This has just been, the same analysis, for the last, several days. Nothing's really changed here. So 110.50 would be doable, and maybe even up to 111, which Paul was mentioning too. I think that's entirely possible if we can really start to break higher. All right. Again, the question is, what can the ECB do? And my answer to that is probably not a lot. Now, if they do indicate that they're going to extend quantitative easing, maybe that does sink the euro, but I still think it's a little too early at this point for them to even do that. All right, so 110.50 is possible. Okay, and that'll be resistance on the way back up. We're bearish, but today we might see a continued squeeze. We could. All right. Let's go into the cable. So the pound had the UK had retail sales overnight, and it was weaker than expected. And the pound's underperforming at this point. You can see here's the pound. And what's really interesting about the pound is the rejection that we've seen here. And let me go ahead and remove that. The rejection that we've seen here at that 618 retracement. That's of the post-pound, sell-off. Okay, the high to the low, 618 rejected multiple times, which means that 123.25 is major resistance. And until we can get above that, the bearish case is still very strong. There's no real reason to be on the long side of the cable at this point. Okay. Now, where can we go from here? I'm pretty sure, and I can't remember. Actually, can you guys tell me what we wrote down for support yesterday for the cable? What did we write down for support for the pound yesterday? 122.50. Thanks, Scott. So to the overnight low in the pound was 122.50. Hey, not bad. Not bad. That's what we wrote down yesterday, and guess what? support. Now I'm going to have to write down further support because let's make the assumption, which I don't know if is the right assumption. I'm just going to say let's make the assumption that the pound or the euro dollar breaks down. Okay, like I said, I don't know if that's the correct assumption. I'm just, since the euro is so close to support, let's just make the assumption that it breaks down. If it does, that means the pound is likely to come under pressure too. It's you know, that they tend to go hand in hand. You know, somewhat, you know, parallel relationship, if you will. So if we do sell off in the euro dollar, you know, the next support, if you look on like an hourly basis, it's at 122, right through here. So in the event, I'll extend this out, in the event we break this 122.50, then, you know, 122 is possible. So I'll write down 122 is possible. Okay? All right. Let's go into the Swissy. Oops. Here's the Swissy. Now, I'm still on the Swissy. I'm sitting in it. It's getting a little wobbly ahead of, you know, I don't know if we can really rely too much on this chart formation, you know, ahead of the ECB meeting, but we are seeing a little bit of dollar Swiss weakness. You know, I think we are starting to break lower here, and we have about, what, a minute? We have a minute before, or 3 minutes before the ECB rate decision. They're obviously not going to, you know, what's the ECB going to say? You know, we're cutting rates? No, they're not. So the Swissy might sell off and get down to the 98.35 level, which we've talked about as being support, and I think that's what we wrote down as support maybe as early as yesterday. Okay, so let's write down 98.35, 98.50, but I would really say 98.35 is going to be support. And then resistance is going to be 99.10 and then 99.50, as you know. It's still bullish while we're outside of this channel, so just keep that in mind. Even though my dip today, as long as we're out of this channel that we've been in for the last year, even if it dips a little bit, you got to look at that as a buying opportunity. All right, we got about 2 minutes, guys. Let me see, dollar yen. So the dollar yen, I am still long. I had a question from Amit, asked if I'm still long. I am still long the dollar yen. But 104.50, obviously big resistance right up here. Support is 102.80. That is also the 38% retracement if you don't remember from yesterday. So I can go like this really quick and do this and do this. Okay. This 102.80 right down here will be horizontal support. Okay. So 102.80. Okay, here's the ECB meeting. Hold on. Euro dollar should spike up as the ECB will do nothing. So what's the euro? It should spike higher. We might spike to 110. Okay. Must have left rates unchanged. Okay, euro's not doing anything. Surprised the euro didn't go up, frankly. All right, here we go. We're starting to pop a little bit here. They just left rates unchanged, as expected. But their lending facility unchanged as well. Huh. Euro selling off. Yep.
Yeah, the only thing it just says ECB says regarding non-standard monetary policy measures, the Governing Council confirms that the monthly asset purchases of 88 billion euros are intended to run until the end of March 2017 or beyond if. So that's what they've already been saying. They've already said that. They'll go beyond if conditions warranted, but they have not given an explicit definitive. We're going to go beyond. So I guess, and it makes the most sense because remember back in December 2015 when they announced it, we had the same similar pattern, which my blog post was, and then they spent all their bullets, so we rallied 350 pips in one day. Then March, they reaffirmed it on the next meeting and rallied over 200 pips. So there's no point in him saying anything today, which I thought maybe they could. So that just makes the most sense for them not to say anything. And only thing I think you'll see him do is refute the talk about them reining in purchases, and then he'll probably say, yeah, well, if it warrants it, we'll extend beyond March 2017 without giving a definitive answer because he doesn't want to, shoot his wad. So then in December he can come out and say, yes, we're extending, and get a little more extra juice from the euro. So
yeah, I doubt there's going to be. I doubt he's gonna say anything like he's gonna talk about extending during the press conference. So we'll just have to wait. We'll just have to wait for 45 minutes here.
I think we'll just dip, but I don't think we'll make new lows. We'll probably dip into this 960 area and find some support, and then from there we'll probably just start ratcheting higher for the rest of the day.
Yeah, okay. I wouldn't doubt it. All right, thanks, man. All right, traders. Really nothing going on. So we got to wait for Draghi in about 45 minutes time. So that means in the meantime we got to get this analysis done. So I just finished up the dollar yen here. The dollar yen, as you guys know, here's the dollar yen. We have 104.50 is obviously big resistance, up here. We really have to scale above this resistance for it to be bullish, but actually it's 104. I guess whatever the high is here, 104.63. So I'm going to write down 104.65. So that's really okay. And then 102.80 is support. I don't think I would do anything with the dollar yen. I am long, but I'm not adding. I'm just sitting in what I've got because I don't want to be too aggressive while sitting in this, bebopping around here. I'd rather, get more aggressive should we break higher. One of the things that I have to mention, if you came in a little bit late, the Nikkei looks pretty strong here. So if the Nikkei continues to look strong, that's going to feed on that dollar yen higher as well. Just something to pay attention to today. Okay, so that was the dollar yen. Let's go over to the Canadian. So the Canadian got a hell of a squeeze. We got a hammer from yesterday, big hammer, following the Bank of Canada rate decision, and really it wasn't just the BOC rate decision. It was Polis that said that they're exploring additional measures to stimulate the economy, and that really reversed the dollar Canadian. So I didn't pull the trigger on the long side yesterday, although I sat there at the end of the day and I mulled it over, and I'm like, I should be buying the dollar Canadian going into last night's debate. I just I was too busy dealing with the Aussie, so I just didn't do it. But anyway, the dollar Canadian gave us a big bounce. We wrote down the support being at 130 yesterday, and we came to 130.05. Really big bounce, and now we're at risk, obviously, of a continued squeeze higher. So here, let's remove that. So when I say a continued squeeze higher, my thoughts are if we break this 131.80, we're going to trade up towards 132 and quite possibly above that. So 131.80 is big resistance oops, is big resistance here. And support now, dips, you have to imagine dips down to 131 are going to be very well supported. Traders are going to, look at that as saying, oh man, I'm still short. So if I can just get a dip to 131, you're probably going to find buyers down there. That would be my assumption. So let's take a good look at what the fibs would give us. Hold on. So 130.90 is a 50% retracement. 130.70 is the 618. So you know what? Let's write down 130.70 as being support, and we are still in a range. All right, guys, I'm going to put you on break for a few minutes. I'll be right back. Don't go anywhere. Sorry about that, guys. I accidentally hit my mute button. Okay, you should be able to hear me now. So we have this, big channel in the QE. And here, let me change this. I'm redrawing everything just to kind of give you guys a idea of what we're dealing with. So we have this head and shoulder pattern. Head, neckline, shoulder, basically. Okay. All right. Now, what we also did overnight is we rallied to challenge the underside of this trend line. Here, let me undo this. Let's go over to a 4-hour. Okay. And let's take the fib from the high to the low. You see we hit the 50% retracement and then we reversed. That 4-hour, I shorted the Kiwi yesterday when I shorted the Kiwi when I shorted the Aussie. Okay, so now the Kiwi, what we gotta watch is obviously the highs. We can't break 72.65. If you're short, this just can't stay short if that happens. Like I can't stay short the Kiwi if that happens. Okay. Now a break back below 72, let's just call it 72 cents, would be bearish. Now the reason why I'm short the Kiwi, and I shorted it again, I wasn't short through the Aussie jobs report. Okay, I closed out my Aussie short. I closed out my Kiwi short. Now I reshorted both of them after the fact, but my thought here is if the Kiwi is bearish, or excuse me, if the Aussie is bearish and it gives us a failed breakout, then the Kiwi is going to do the same thing. Now I'm staying bearish the Kiwi until we break back above the neckline here, or the the shoulder here. Okay, should we break back above the shoulder, just roughly it looks like that, we break back above here, and then I can't be bearish anymore. But this is still working, the head and shoulder pattern. Now, again, it's had a nice squeeze. So is the Aussie, and we would have to see a move back below 72 cents to put the downside pressure back on for the Kiwi. All right. Let's go over to the Aussie. Now the Aussie, this is the one that, this I think caught a lot of people off guard. I even closed my Aussie short yesterday at 77.10 or so. Yesterday I closed it out because we closed the day breaking out. We were right here, and I'm like, okay, I can't stay short this thing, so I got out. Okay. We, ahead of the Aussie jobs report, we were rallying, and it was squeezing even further. numbers came out, it reversed quickly. I shorted it at 77.07, um, and, uh, and I'm staying short now. Only a break back below 76.45. That's where things really start to unravel, because anybody who's long now, first of all, I can't imagine people right now saying, okay, that was a bad jobs report, I'm staying long. But people that are here 76, I need to write that down, 76.45. People that are long probably have their stops below 76.45. We've written down 76.45 for the last couple of days. All right. Now, Paul was saying, we might try to set up a head and shoulder pattern. Yeah, we might. I mean, we could rally back to 77 cents, but I think any move now to 77 cents, there's going to be sellers out there, because everybody is now looking at the Aussie dollar afraid of a false breakout. Okay. And I'll tell you, there was not one person yesterday that was bearish the Aussie. I mean, I had a short Aussie dollar on, and I should have just stayed short. I should have just, held on. Although it was no harm, no foul. I mean, I lost a little bit. I ended up, overall losing a couple pips, because I closed it at 77.10 or so, and then I reopened it at 77.07. So it's like I left 3 pips on the table. But everybody was very bullish to Aussie yesterday, extremely bullish, and it rightfully so. I mean, it looked really like it was breaking higher, but now we're possibly left, if not an engulfing pattern. Okay, it's a very bearish candle regardless. It may not be a bearish engulfing, but if we close near our lows today, I don't know if anybody's going to want to stay long going into the end of the week on a failed breakout, and especially if you take a weekly candle. If you have this long wick and we end up closing down towards, like, let's say 76.30 or maybe even 76 cents, that's going to be a very bearish event for the Aussie. Okay, so I think anybody who's bullish right now, or who is long, is probably genuinely pretty concerned with the price action at this point. Okay. Let's go into the dollar index. Okay, here's the dollar index. Now, the dollar index is we had this same conversation yesterday, so I don't have to get too crazy here, but we've rallied substantially, and here, let me get rid of this. We don't need that. We are holding our rally, our recent rally, and we're consolidating these gains. And if you're bearish the dollar, you're probably pretty concerned that we're not pulling back. The longer we hold up here, the more bullish it becomes, because when you don't get something to pull back, then eventually the pressure lets up. It's like I always use the analogy, the balloon that you're trying to push underwater, the big bouncy ball, the medicine ball. You're trying to push it underwater, and it won't go, and then finally you get so tired, you let go, and the ball just pops right out of the water. Okay, that's the situation we have in the dollar index right now. Like, people are trying to short it, they're trying to put pressure on it. It's not breaking down. So anyway, break above 98.18. I mean, we target 98.50, which is the 127% extension. So I'm going to have to write it down, just because with the ECB, 98.20, with the ECB, we could very easily pop above these highs, meaning the euro could, break lower. It's very possible. Now, support for the dollar is at 97.50, 45, and that has been holding. And obviously, if we break below 97.45, then that's going to start a retracement in the dollar. Okay, it's just going to. It is bullish. Now, I bought the peso yesterday. Last night, ahead of the debates, I tweeted a chart. This chart actually, that the U.S. dollar Mexican peso is on trendline support, 50% retracement, trendline support, and I told the guys and gals in the chat room I'm getting long. You know, I bought it at 1852. Okay, the risk is below 1840. And I was really hoping for Donald Trump to do better than he did last night, because if he did, then this U.S. dollar Mexican peso would probably be back up at 19. But you know, he didn't. But still, you're seeing the peso somewhat weak. I think it's had such a decline that it's had such a decline that it just hit in some technical support, and I believe that this is just probably nothing more than just technical support. Okay. Let's do this. There you go. All right, so any rally now to this previous support should find sellers. So any rally to 18, what is that? 1878. That should be really key resistance. We are in a range. But yeah, I picked it up last night. I figured, well, it was a good risk reward at that time, to be long. I don't know if I'd necessarily buy it right now, but if we get a little bit of risk aversion, it may pop higher. We'll see. Okay, where am I at? U.S. dollar, Norwegian krona. Now, crude oil. Yeah, we got to be careful with this one. Let me stop right here and let's delete a few things. Let's remove that. Let's remove that, and let's remove this, and we'll redraw the fib. Okay. So if you look at the U.S. dollar, Norwegian krona, you'll notice that we had this. There you go. That's for Luca. Okay. All right. All right. We had that false breakdown. We've had this trend line that's capped us. The way it's looking right now, to me, is that we've got this like flag developing. Now, if you look at crude oil, and I'm gonna stop here, do this. Well, let's go to a 4-hour. Be a little bit more granular with this analysis. Okay, so we have this possible look like that. Okay, so you can see. God damn it. Okay. All right. So here's your flag pattern, right? So what that means is if we break at this point 820, that's going to be a pretty bullish event for the U.S. dollar, Norwegian krona. I'm going to write down actually 821 just to give it a little bit of room up here. But if we break through 821, that's going to turn bullish because now we have a flag pattern. All right. Now, crude, by the way, looks kind of like the Aussie dollar, where you have this potential of a false breakdown or breakout, excuse me. Which, if that's the case, I mean, I'm sure crude bulls right now are probably going, crap. You know what I mean? Like, damn it. I'm long and it's not looking too good. If crude rolls over, then the US dollar and Norwegian krona may spike up. So if we break this 821, I'm thinking we're going to 840 pretty quickly. Okay? Especially if the ECB is dovish. Let's think about that. Okay? All right, so 810 will be support. That's a 50% retrace since the bottom of the flag. Okay? We're in a range, but keep your eye on it. Now, what you really should be keeping your eye on, obviously, is the US dollar Swedish krona. Okay? This US dollar Swedish krona is very well bid, and it's not backing off. So if the euro does sell off, my assumption is the US dollar Swedish krona is breaking out. And if we break above 888, that's the number you have to watch. 8.88. It's going to be very bullish. Support 877. And this is already turning bullish because we're outside of the flag. So just so you know, let's go over the weekly chart. So we're already outside of the flag. A breakout above here gets obviously mega bullish. All right. And like I said, it's all dependent on the euro right now. If the euro rallies, the US dollar Swedish krona is probably going to pull back. If the euro sells off, this US dollar Swedish krona is going to break out, and then we're talking about a massive, massive breakout. And I'll reiterate what I've told you guys all week. If the US dollar Swedish krona breaks out and you're short the US dollar, you have to be very careful, because the US dollar Swedish krona, in my experience of trading the currency markets for the last 14 years, pretty much exclusively, because previous to that I was an equity market trader. In my experience watching the Swedish krona over the years is that if this thing breaks out, if it breaks out or breaks down, it tends to be a leading indicator for the rest of the dollar pairs. Okay? That's what I've found in my experience. So that's why a breakout above here would be very bullish for the dollar. Okay, so there's your bias chart. It's finished. We have about 15 minutes before Mario Draghi takes the stage, which is always the highlight of my month. Just kidding. I'm obviously speaking with a little sarcasm right now.